Alright, good morning, good morning. Thank you guys so much for tuning in to today's live stream. It is July 1st, the first trading week, or the first trading day of July. To begin today's live stream, I do want to take a look at the economic calendar here. So we had Fed Jerome Powell speaking today at 8:30 a.m. Central Time. And coming into later today, we have ISM manufacturing PMI, and we have JOLTS job openings here at 9 a.m. Everything else seems to be less volatile news. ISM manufacturing is a index that measures so it's a survey of about 300 purchasing managers, which asks respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventory. So it's just a survey. And JOLTS job openings is it measures the number of jobs during the reported month, excluding the farming industry. So it measures the amount of jobs that are going to be open. Here we actually see that there's a really there's a lot of jobs that have been opened up here coming into the 2020 to around 2022. It's on a gradual decline right now from the end of 2022. And yeah, so from the start of 2023 to now, it's on a steady decline. But estimated is that there's going to be 7.32 million jobs opened here. And so that's some of the economic drivers here for today. And I think now we can go into the economic, the technicals. And so coming into for the technicals today, here we have the daily candle from yesterday. And with the way that we closed here on this daily candle, to me, I don't want to see previous day low get taken, because we did create this daily fair value gap. And with the way that we closed yesterday's candle. Yeah? Oh, okay, yeah, bye bye. And with the way that we closed yesterday, like I said, I don't want to see us take out the daily low, because where we closed yesterday, this is where we closed yesterday. And that red line indicates yesterday's closure. And notice how it takes 3 candles to create a fair value gap. So the candle is, there's one candle here, there's another candle here, and there's another candle here. And so watch where our high was on the second candle. This is the second candle's high, right? And with the way that we closed yesterday, tells me that we should treat the daily fair value gap as a breakaway gap coming into today at least. And so to objectively look at this, the reason why I would treat the daily fair value gap as a breakaway gap is because yesterday's closure was above the second candle's high, or in this case, the red line is above the purple line. Because of that very reason, I have to treat the fair value gap as a breakaway gap. It doesn't mean that we won't rebalance into the fair value gap. It's just there's higher probability that we wouldn't rebalance into this fair value gap here. And yeah, that's just one of the ideas that I have in mind coming into today. Another thing that I want to draw your attention towards here is that we have already completed the weekly objective. The weekly objective coming into this week was for us to take out the weekly high. And we took out the weekly high yesterday. And so I can't utilize the weekly time frame anymore. Coming into today, I would utilize, the daily time frame. The daily time frame tells me that we should take out previous day high. However, I'll get into that in a second. But yeah, coming into today, I would utilize the daily time frame and the intraday time frames. Intraday time frames could be the 1 hour, the 4 hour, the 6 hour, the 8 hour, or the 10 hour. So yeah, that's kind of what my approach is coming into today. And I think one thing that I also want to mention is the monthly candle. So notice how today is July 1st. That means that we did close on a monthly candle yesterday. And this is how we close here on June's month. This is the trading of June. And with the way that we closed on this monthly candle, I can anticipate for previous month's high to be taken. The very next monthly candle coming into July, I want to see us open, maybe trade lower, manipulate, and then expand higher towards the monthly high. That is where I would like to see prices, right? I want to see us take out the monthly high at least, and then from where we go from there doesn't really matter to me. I just want to see us take out this monthly high. And notice here, if I go into the weekly time frame and I take a look at the 6-month candle, this is the monthly or the 6-month candle from previous month, or I guess from previous 6 months, right? Notice how we closed here on this candle. With the way that we closed here on this candle, I can anticipate for us to take out the 6-month high, which is the same high as the monthly time frame. Same thing here on the 3-month time frame as well. 3-month candle just closed here. With the way that we closed, I can anticipate for us to take out the 3-month high. So I'm pretty bullish coming into today. Or I mean, not even today, but I'm pretty bullish coming into the 6-month. Coming into the next 6 months, coming into the next 3 months, and coming into the next month. I want to see us take out the monthly high and expand towards that high. And let's see here. So yeah, that's kind of what the objective is coming into the macro sense here, let's say, like I said, coming into today, specifically, I want to treat that daily fair value gap, like I said, as a breakaway gap. I'm not going to force the idea that it shouldn't be rebalanced. It's just, because objectively looking at it, I don't want to see prices trade down into there. And let's take a look at some SMT. So all-time highs here on ES and all-time highs here on NQ. So ES has failed to take out all-time highs, whereas NQ, we have taken out at all-time highs. For right now, we have an SMT between ES and NQ, right? So this could allow for a short-term reversal in prices, right? Because there's a lack of SMT. However, I would still favor higher prices because of, let's take a look at the 6-month candle here on ES. Yeah, the 6-month candle here on ES suggests to me that we should most likely take out the 6-month high. And so, I mean, once we take out the 6-month high, the question is, are we going to continue to expand higher towards the yearly high? Or not the yearly high, but all-time highs. And yeah, that's kind of where I am coming into today here on ES and NQ. Like I said, I'm not really going to force anything yet, but yeah. So just watching really patiently, watching to see how we trade here at the previous day low. Like I said, I don't want to see us take out previous day low, but yeah. Right, so let's see. We have about 12 minutes left until we close here on the 4-hour time frame and the 8-hour time frame. Until we do so, I'm not really gonna force anything. No ideas here to be forced. Rebalanced into, or I wouldn't say rebalanced, but retraced back into the discount of the dealing range. And yeah, just I'm coming into today, my approach. Bye, Ma. Coming into today, the best approach for me to take is, like I said, to utilize the 8-hour time frame and the 4-hour time frame. I want to see how those two time frames will close. If they close bearish, then I will be targeting the 4-hour low and the 8-hour low. If we close bullish, then I'll be targeting the 8-hour high and the 4-hour high. That's essentially what I'm going to be doing coming into today. And yeah. Pretty simple approach coming into today, to be honest. La 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 da da. right? Like I said, just being really patient, just watching and seeing what we do. We have 10 minutes left until the closure, so I'll take this time to go over some of the pros and cons. The first pro from the previous week, where I can transfer it over onto this week, is just to be consistent. Being consistent, taking consistent setups, requiring a higher time frame objective, a model, and a entry pattern. Those three components that I look for has to always be present before I execute. A higher time frame objective is essentially kind of like, what's the macro reason for why we should be continuing in this specific direction? Your model is, how are you going to align yourself with that higher time frame order flow? So if, for instance, if the weekly is suggesting higher prices, then your model could be on the daily time frame, and it should have a different objective but in the same direction. So like I said, if the weekly high is the draw of liquidity, meaning that we are bullish, then I am going to look for a bullish daily candle that has a different objective but also suggesting bullish prices. So we could be targeting the daily high and hoping for a expansion towards the weekly high. Your entry pattern, or I guess my entry pattern specifically, is to it's always going to be a fair value gap. Fair value gap suggests that there is displacement, that there is momentum towards a specific objective. It allows me to take the entry, have an entry point, right? And also it frames the stop loss for me as well. So it's very important to have those three components. The second is watching for SMT between NQ and ES. Like I said, coming into today, the fact that NQ has taken out all-time highs already, and the fact that ES has not taken out all-time highs indicates that there is a SMT divergence between the two indices right now, which is something that I'm watching very closely. And yeah, so lack of SMT. If there is no SMT, that means it's more possible of a potential continuation. But if there is SMT, then you have to consider the fact that we could potentially reverse. That's the second pro. Third is to utilize every single time frame. Notice how coming into today, I gave you guys a macro sense of where we should go based off of the 6-month time frame, based off of the 3-month time frame, and the 1-month time frame. Notice how I used the weekly time frame, and I stated that I can't utilize the weekly time frame here because its objective has already been completed. Notice how I also went onto the daily time frame and gave you guys an explanation of what my bias is coming into today. Notice how I'm also utilizing the hourly time frame, the 4-hour, the 6-hour, the 8-hour, the 10-hour, the intraday time frames for a bias as well. Every single time frame will have its own objective. It will have its own reason for where we should go, and utilize that to your advantage. The fourth is to be patient. I don't want to force anything to happen. there will always be opportunities. Sometimes, prices will tell me that, or I wouldn't say tell me, but will suggest to me that we should go in, that we should be trading towards a specific direction. But like I said, if I don't have all three of my components that I look for, I'm not going to force anything. Unless I have those three components, I'm just going to be sitting on the sidelines and just kind of tape reading. So that's going to be all of the pros and cons. One thing that I can work on is whenever I am in a execution, whenever I am in a trade, I want to watch closely at how we treat the consequent encroachment of my fair value gap, the entry pattern that I'm taking my trade off of. If we respect the consequent encroachment of the fair value gap that I'm using, that's really good signs. But if we begin to disrespect the consequent encroachment, if we close below the consequent encroachment or something like that, then I will consider closing my order. That's just something that I have noticed whenever I am executing, is that most of the time, if the setup is going to play out, the consequent encroachment should be respected. And to really wrap things up, the improvements is just a summary. Being consistent, having those three components, being able to identify those three components before I execute is key to consistency. Second is watch closely between the relationship of NQ and ES. Their relationship shows you if there is SMT, and SMT is essentially a indicator that shows you when there has been manipulation. Third is, like I said, just to be patient. I think that's also one of the core values of mine, is to be patient, calm. Don't force things to happen. And you have to just accept the fact that sometimes you're going to have to sit on the sidelines and just watch prices do its thing. You can have a general idea of where prices wants to go, but unless you have a model, an entry pattern, and all three of those components, you can't force anything. The last is I want to track my journey, so I want to be able to journal every single one of my executions. I'm doing a pretty good job on that so far. And so let's get back to the technicals. We are about to close on the 4-hour candle and the 8-hour candle in about 1 minute. With the way that we are closing, it's really not suggestive of either direction. I can't make the claim for higher prices or lower prices with the way that we are closing. And so if we do close neutral, I'm not going to have a bias coming into the morning, and I will have to just pivot from different time frames. So if I can't utilize the 4-hour and if I can't utilize the 8-hour, then I would go on to a different time frame, such as possibly the 1-hour time frame, the 30-minute time frame, the 15-minute time frame, for a clear objective. But it looks like I'm probably not going to utilize these two time frames here coming into today, to be honest, and that's completely fine. And here we are. We're about to close in about 5 minutes or 5 seconds or so. And we just had this massive drop and a massive move up. I believe that is possibly from the JOLTS job openings. That's, you see that movement? That is not a place where you want to, like, we had this massive move down and massive, that was very volatile. Alright, so it appears that ISM manufacturing PMI is below 50. Anything that's below 50 indicates that there is a contraction in the economy. Contraction is not good. That means it's not, the economy is not growing, it's not expanding. And so JOLTS job openings here is higher than forecasted at a 7.777. I think that's got to be a lucky number, but it came up to be higher than forecasted. And yeah, so that's kind of my idea coming into the morning session here. We did end up having a really last second closure, making it with the way that we closed now on the 4-hour time frame and the 8-hour time frame, you could say that we should take out the 8-hour low and the 4-hour low, which is reasonable, right? And so I would look for 4-hour low here and 8-hour low if we can get a bearish hourly model or 2-hour model. And yeah, I think that's going to be all for today. I think that's going to wrap it up for today. And yeah, thank you guys so much for tuning in to today.